If you simply Google the words silver Comex corruption, you will get a plethora of articles all speaking out against this fraudulent, highly illegal activity. It's no secret that silver's price is and has been for decades extremely suppressed, and many have spoken out about this. Andy Schectman always uses the phrase, price is the greatest tool of misdirection, meaning that to outsiders looking into silver, it really doesn't do anything and never has. That's exactly what the banks want you to think as they pile up boatloads of this shiny stuff. We're about to dive into a very well-written article exposing this type of corruption. But remember, this situation goes deep, very deep. Some of the world's biggest banks and CEOs in a perfect world would be locked up for years, and silver's price would be that of your greatest imagination. Will this perfect day ever come? Many say yes, and those say it's coming a lot sooner than you may think.
Connection established.
Hey, what's up, Silver Stackers? Thank you so much for tuning in. This is Silver Slayer, so now let's talk silver. To fully capture the magnitude of this whole scheme, I want to show you a couple of documents from the United States Department of Justice. This is justice.gov. Check this out. Former JP Morgan traders convicted of fraud, attempted price manipulation, and spoofing in a multi-year market manipulation scheme, saying this spanned over 8 years and involved thousands of unlawful trading sequences. We're talking about 3 of their employees getting sent to prison, another one for racketeering or RICO charges, and it just goes on. The biggest thing to remember is those are just the ones that got caught and thrown under the bus. And this is not the only bank that's been doing this. The Dutch Bank and Merrill Lynch also both got caught doing this. And I'm sure it's been going on for a lot longer than 8 years. So folks, this is serious. JP Morgan got fined $900 million a couple years ago, which was the first time a judge actually cracked down on this. It used to be a slap on the wrist, but now if you're a banker and you know your life might actually be affected besides just paying a fine, you might actually have to go to prison, you might second guess doing this. Regardless though, I want to show you guys a little of the inside scoop of this. So with that said, let's check out this article from sproutmoney.com titled The Continuing Comex Fraud. So, last week, we wrote about the pending price correction in Comex gold and silver due to the extreme level of futures contracts issued by the market-making banks. Now, they're talking about a situation that happened last week, so then they just exposed this whole thing full out. Regardless if this was written in 2019 or today, doesn't matter. This is just what sparked them to write this article. With price getting smashed this far this week, it's time to explain again the dynamics of this tried and tested price manipulation technique. First of all, understand that the alchemy of gold price exposure was created in 1974 for the express purpose of managing price in lieu of physical metal supply. The London gold pool had collapsed in 1968, and Nixon had suspended the dollar's convertibility into gold in 1971. Absent new physical sources to control price, investment products were soon created as vehicles for the purpose of siphoning off physical investment demand. And that's exactly what it is. They used this Comex to basically mask the market, this entire facade of what the digital side versus the physical side of things is. And it's supposed to be an equal ratio, but it's not. Andy Schectman recently said it's 15-1, meaning every 1 ounce of silver you hold in your hand, 15 other people own that same exact ounce on the Comex. But if they tried to turn in that contract and get that ounce, it's yours. And the other 14 people, along with that one person trying to get their ounce, would also be saying, hey, what would happen, or when this happens, what's going to happen? The Comex would collapse. It's almost happened before, and we've seen a lot of how dirty this whole thing could get with the Hunt brothers in 1980, which, by the way, pushed silver to the highest price ever, which was $50. Or you could even look at Wall Street Silver's silver squeeze, or even beyond that, look what happened to the nickel market. There's a lot to this, and I do see a day and age where they won't be able to do this anymore. Of course, it's not just futures derivatives contracts that serve as gold price exposure. The decades that followed led to even more synthetic gold creation through investments such as unallocated accounts and ETFs. And by the way, before we keep moving on, I wanted to mention with the JP Morgan stuff, since we did already show these two articles, this isn't directly correlated to the Comex. The JP Morgan, this whole price conviction manipulation scheme has to do with something called spoofing. Spoofing is when you go on an exchange and place hundreds, if not thousands, of buy or sell orders. Now, the thing about this is, what they do when they place these orders is they cancel them before they go through. So everyone on that exchange thinks, holy crap, a whole bunch of people are buying up silver or dumping their silver. So then they see that volume on that exchange and they start investing off of this fake thing because they don't know those contracts are going to be canceled, or that order is going to be canceled. So they manipulate the market, basically just convincing other people to do what they think is happening. And then they cash out because they use that to their advantage. The hardest thing about spoofing is you're allowed to cancel buy and sell orders. So how can a judge determine if it was done with ill intent or not? That's the trickiest part, because these bankers can just say, I just canceled the order. And you're allowed to. So how can you catch someone with the ill intent? You have to look at a lot of patterns, and it's a very tricky subject. So anyways, however, it is the trading of the derivative futures contracts that are still utilized to determine price. The bullion banks use their monopolistic dominance of these markets to control price and selfishly profit at the same time. So it's imperative that you, as a precious metal investor enthusiast, understand the dynamics of this fraudulent and illegitimate pricing scheme. The price you pay for physical gold and silver is not determined by an exchange of cash for metal. Instead, it's determined by the trading of futures contracts, the supply of which is controlled by the market-making banks, with these contracts somehow accepted as a proxy for the physical price. Why do we always use the term fraudulent when discussing this price discovery scheme? Let's look at both sides of the trade. And by the way, some of the main people on the Comex are owned by working with JP Morgan, the bank that is heavily known for and gotten caught several times for manipulating the market. Just think about that. The futures contracts are issued by banks which have little to zero access and ability to deliver physical metal if forced to do so. Comex contract settlement is just an implied ability to physically settle contracts and delivery. This even though the market-making banks own very little actual gold. And by the way, they manipulate the price of silver because silver is a much smaller market than gold, so it's a lot easier to do so. That's also why silver is much more volatile. The futures contracts are demanded and purchased by speculators who acquire the contracts via loaned funds, which is margin, and then never seek to actually take delivery of physical metal. So they're going off of the hope that nobody actually turns these contracts in, because usually they don't. But what happens if in like the LBMA, the Comex, and the LME vaults are near empty? What happens when, even if they don't turn that contract in, or everyone doesn't, what if even some that turn the contract in can't get that, or they can't supply that contract? So if banks sell contracts with no metal backing, which I just explained, they don't have enough to fulfill that contract, and these contracts are purchased by speculators with no end demand for physical, then what does the trading of these contracts have to do with the actual value of real physical metal? The answer is nothing. That's crazy. Low supply, high demand shoots the price up. And this is exactly what happened with the Hunt brothers. The Hunt brothers were billionaires, these three brothers, and they tried to buy all the silver on the Comex and turn the contracts into physical, like what they were just saying. Well, they owned up to, and some say up to 77% of all the silver in the world. Now, who knows what the actual percentage is, but regardless, they bought up all these contracts. The Comex obviously didn't have that much. It would have gotten exposed, so the government banned silver on the spot. It was called Silver Rule 7. And when the Hunt brothers were doing all this, it pushed silver to the highest price it still has been till this day at $50. Regardless, though, it's a lot deeper than that. They didn't, and they banned the buying of silver on the Comex. You had to sell it, and you couldn't sell it to anyone besides the government or the feds. So anyways, here's the rub. Since the bullion banks have infinitely deep pockets in the full protection of the central banks due to their too big to fail stature, there are no limits to the amount of derivative contracts that they can create during a period of speculator demand for gold exposure. Therefore, as price rises, the total supply of Comex gold futures contracts expands. The banks issue new contracts in order to meet speculative or speculators' demand. Price rises, but not as much as it would if the supply of contracts had been regulated to remain constant and tethered to some sort of physical backing. If that person on the Comex actually had that ounce or 100 or whatever, however many ounces or bars, the 1,000-ounce bars they have, if that was a ratio that was equivalent, if that much silver was actually backed, then you could see why this would work. But the thing is they don't, and they're lending it out to others, and then it just like our monetary system, right? It's like trying to pay off a credit card with another credit card, and they're borrowing and saying this person gets it, but then they're taking from the person that already owns it to give to this next person. The price inevitably falls due to buying momentum exhaustion. Speculators sell their gold exposure. The banks use this spec selling to buy back and cover their fraudulently issued short delivery obligations, and total contract open interest declines. So, turning back to the present, why is it so important again today? As we wrote last week, total contract open interest for Comex gold has surged again to new all-time highs, and what do you know, the price is now falling. So, system apologists will attempt to claim that the derivative pricing scheme is legitimate because it serves as a vehicle for gold and silver producer hedging, and that of all the contracts created are only for those forward-selling purposes. However, just this week, the World Gold Council revealed that the current global hedge book for gold was contracting in the third quarter, not expanding, and that currently stands at 265.8 metric tons. And if this guy would know the severity of it today in 2023, what the Comex vaults look like, and how much demand is going on. It's not realistic, right? It's not realistic. And if you've ever heard someone like Andy Scheckman talk about this, which he really understands it because he himself is a precious metals dealer that works off of this and is one of the only few authorized dealers that still works with the U.S. Mint. So he has a behind-the-scenes look at all this. Beyond just me as a customer, it's very, very scary to hear what he talks about. So why the heck is total Comex contract open interest at an all-time high of 688,000 contracts? What is the need for 600,000 contracts above and beyond the producer hedging? I mean, let's not go into that part. I mean, yes, we know the banks control this obviously fraudulent price scheme, and they're currently attempting to blunt reverse the 2019 price rally by endless amounts, right? They just oversaturate, overflood the market. But in the end, this is all just frustration and noise for those of us who are forced to track the digital derivative price on a daily basis. What are the implications for you, the long-term precious metal investor? That's the important part. It's if you know, let's say someone new gets in, finds this video before they start buying silver, or they're on the fence, they're going to ask themselves, why would I invest into something when the price is rigged? Why would I do that? Well, the whole point about this is this cannot live on forever. This bubble will pop. This will get exposed. It's not if, but when. Understand that the current digital derivative and fractional reserve pricing scheme is rooted in fraud. It's also defined by the illusion that gold and silver are plentiful when they are not. What is plentiful is all of the exposure that the banks have alchemized over the past 4 decades. What is not plentiful is the actual physical metal that underpins the system. Therefore, when this system implodes, when it implodes upon itself, physical metal will be scarce and the price will be multiple times higher in all currencies. If you don't currently own physical precious metals, be sure to do so before this fraudulent pricing scheme finally collapses. And there you have it, folks. Couldn't have said it any better. When this whole scheme falls, Comex vaults already are empty. Basically, they admitted it. The LBMA, they came out and admitted it. We're running on fumes, and it's only going to get worse as we see demand booming. Industrial demand pushes silver imports to record highs, right? India bought how much? Like 700 million ounces last year alone. This isn't just going to blow over. This is something that is real. It's not if, but it's a when. Let me read that last part again, because this is so important to understand. Understand that the current digital derivative and fractional reserve pricing scheme is rooted in fraud. It's all fraudulent. It's also defined by the illusion, right? What Andy Schectman says, price is the greatest tool of misdirection. And that's why it's the illusion that gold and silver are plentiful when they are not. Remember those articles I used to read of that one article that said there's plenty of gold and silver, these people don't know. That is blatantly false. They probably know that, but they're pushing something that doesn't fit the narrative of that. They push this illusion that gold and silver are plentiful when they are not, especially silver. What is plentiful is all of the exposure that the banks have alchemized over the past 4 decades. What is not plentiful is the actual physical metal that underpins this system. Therefore, when the system implodes upon itself, physical metal will be scarce and the price of it will be many multiples higher in all currencies. Low supply, high demand pushes the price up. The fundamentals will finally go back into play, right? The fundamentals. Low supply, high demand. If you don't currently own any physical precious metals, be sure to do so before this fraudulent pricing scheme finally collapses. Because when it collapses, silver will be through the roof, and many other metals will. But silver, being the most scarce tenfold, has by far the most opportunity. Especially then when you look at the industrial side of things, when we need silver for many more reasons and uses than gold. I mean, imagine what this whole situation could bring once the Comex does collapse. So anyways, I hope you guys enjoyed this video. You guys heard me mention Andy Schectman a couple times throughout this video. He is the CEO of Miles Franklin, a very good friend of mine. We tried to do a weekly show. Andy's very busy. He's always traveling to conferences and seminars and shows. He just did one with Robert Kiyosaki a couple days ago. always on the road. So when we can link up, we put out a show. We try to do once a week. Sometimes it's a little longer, but regardless, the whole point is he's one of the only few authorized dealers that still works with the U.S. Mint. He's very reputable, been in business for 37 years and never had a negative complaint, because if they mess up, which they do, he admits it, they make it right. He fixes it. That's extremely important. And since I'm friends with him, I can put you in contact with him if something were to happen, or if you have a question about buying or anything. He can help you out. It's like buying silver from your friend compared to some random store. That's very beneficial, especially since he can access silver like nobody else can. He filled a $50 million order in 2 days. Nobody else could pull that off. $50 million worth of silver. Who could find that much? Nobody besides Andy, because he is the most well-connected person in the industry. And I'm so honored to be able to be friends with him and also offer you guys the business relationship to buy through him. It means a lot. So anyways, yeah, I'm going to wrap this video up here. I'll post a link to this article in the description. Just remember, folks, you know, we have justice.gov, the United States Department of Justice, talking about silver manipulation. That's insane, right? That's insane to think about. The United States Department of Justice is sitting here talking about silver price manipulation. Think about that, folks. Talking about the Comex. So anyways, yeah, I'm going to wrap this video up here. Thank you so much for tuning in. If you liked the video, please like the video. Make sure you subscribe. We're on the road to 100,000 subscribers. Thank you so much for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.